Welcome. In this video, will Xcn coin price continue to increase? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. When we look at the chart, the uptrend structure, which is formed in a remarkable way, makes it clear that optimism is prevailing in the market. This is an important technical pattern that shows that buyers have the upper hand in the market, and the price tends to reach higher levels steadily over time. These patterns are of great importance for trend-following traders, as ascending trend lines show that the price regularly forms higher lows and higher highs. Right now, the price is pulling back towards the lower band of this uptrend, the support line. This signals that the uptrend may have entered a healthy correction phase. Such pullbacks do not mean that the overall bullish trend has been broken. On the contrary, this move to the trend line can be considered as a very constructive development for the price to regain strength and gain new upward momentum. It is very rare to see sustained upward movements in the markets. A healthy uptrend is sustained by occasional corrections. The price behavior we are currently observing is a reflection of this logic. Moving towards the support line of the uptrend, the price has touched this trend line several times in the past and has produced sharp upside reactions after each contact. This suggests that traders have adopted this level as a strong point of support and have opened buy positions on every price retracement, pushing the price back up. In technical analysis, such levels are called dynamic support and are usually considered as strong buying zones. According to the current chart, the reapproach of the price to this trend line can be interpreted as a retest process. In other words, the market may be trying to confirm its firmness by testing this support level once again. If the price reacts upwards with strong volume once it reaches this level, this would suggest that investors still see this level as a reliable floor and expect a continuation of the uptrend. Also, if the price reacts upwards from this level, the chances of testing and exceeding the previous highs will increase significantly. In technical analysis, retargeting previously seen highs indicates bullish strength. This indicates that the price is not only bullish, but also has the potential to reach new highs. In other words, a bounce up by touching the current trend line could be the precursor to a bigger rally in the future. In addition, the fact that the price maintains this rising trend structure generates positive signals for long-term investors, because as long as trend structures remain intact, the general trend in the market continues in the same direction. This reassures investors and maintains their interest in the market. Large investors in particular tend to hold their positions in such trend structures. Therefore, as long as this structure remains intact, the overall market trend remains positive. In terms of investor psychology, such trend lines are also quite decisive. Especially traders who rely on technical analysis use these lines as an important reference point. As the price approaches this line, buy positions are usually opened. This strengthens the probability that the price will bounce off these levels. Also, if the price bounces up from this line, the markets perceive that support has worked, and this perception reflects positively on the prices. It is also known that prices touching trend lines often react upwards on strong volume. This shows that not only price action, but also trading volume plays a critical role in determining how strong such reversals are. If there is a significant increase in volumes when the price hits this trend line, this could be a sign of an upward reversal. So this contact could be not only a correction, but also the beginning of a new bullish wave. But we can't decide the analysis only by trends. Let's look at other metrics. Stay tuned. The Fibonacci retracement tool applied on the chart is a very effective and frequently used technique, especially for traders to analyze potential reversal zones in price movements. In particular, Fibonacci retracement plotting from a significant low to a visible high clearly reveals potential retracement levels and the potential for an upward rebound from these levels. This approach was applied to the chart we are currently analyzing, and the result is quite remarkable. The price, which started to rise from the bottom, climbed up with an impressive momentum in a certain period of time and formed a peak, and then naturally showed some retracement with profit realizations and correction movements. During this retracement, Fibonacci retracement levels came into play, and these levels have been an important guide for investors in identifying possible support and reversal points. The area where the price is currently located is very close to the 0,382 level in the Fibonacci retracement. This level is generally considered a mild correction in technical analysis, and is an important zone where the price can regain upward momentum without losing much momentum. If the price reaches this level and tries to hold on, it may indicate that buyers are still strong in the market. In particular, this pullback, which emerged as a correction of the previous uptrend, may signal that if it finds support at this level and buying pressure builds, the the price may start an upward movement again. From this point of view, the persistence above the 0,382 level stands out as a critical threshold for targeting higher Fibonacci levels. If the price manages to break this level clearly and strongly upwards, the Fibonacci retracement levels of 0.5 and then 0,618 will be the next targets. The 0,618 level in particular is considered the golden ratio in Fibonacci analysis, and reversals from these levels usually signal strong trend continuation. In this context, the price breaking 0,382 and gaining upward momentum with a voluminous movement will be a very positive development for investors in terms of both short-term and medium-term positions. It should be noted that Fibonacci levels are not just numerical ratios. They also function psychologically as zones that shape traders' behavior. Since many traders follow these levels, price reactions to 0,382 and then 0,618 offer important insights into the overall trend of the market. If the price breaks the 0,382 level and crosses the 0.5 level and heads towards 0.618, it would indicate that buyers have taken control of the market and the uptrend could continue strongly. Looking at the current price action, there is pressure to break above the 0,382 level. The price compression and structures in this area could be a harbinger of a breakout. Therefore, it will be very important for investors to carefully monitor this area and reassess their positions in a possible upside breakout. From a technical point of view, breakouts at such levels are usually voluminous and can be followed by a rapid price movement, especially if the price holds above 0,382 and daily or weekly closes start to come in above this level. This indicates that confidence is building in the market and an uptrend is gaining strength. This could open the door for the price's potential journey to the 0.5 level, and from there to 0,618. Of course, if auxiliary technical tools such as volume, candlestick patterns, trend indicators, and momentum oscillators also provide signals to support this view, traders should follow this bullish trend even more seriously. The MACD Moving Average Convergence Divergence Indicator is perhaps one of the most widely used momentum-based oscillators in the world of technical analysis, providing the most reliable signals. It is an extremely effective tool for traders to analyze market momentum, trend strength, and potential turning points. Recent developments in the MACD lines on the chart we are currently analyzing have revealed a structure that is particularly promising about the direction of the market and should be followed carefully. The fact that the MACD has made an intersection in the lower region on the chart is an important development that should attract the attention of investors. This type of crossover in the lower zone usually indicates that the price has started to complete its downtrend and is preparing for a new bullish wave. MACD lines can give early clues about the market direction, especially at the moment of intersection with the signal line. In the current situation, the MACD lines have converged and crossed upwards in the lower zone. This is considered a positive signal for traders. This type of crossover often indicates that buy positions are starting to form in the market. Especially after this crossover, the MACD lines start climbing towards the 0 point, indicating that the buyers have taken control and the upward momentum in the market is getting stronger. We should wait for it to reach the 0 point. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.